Hello, I'm Sam Stovall, Chief Equity Strategist of S&P Capital IQ. At this week's Investment Policy Committee meeting, we discussed why the S&P 500's trading volume has been so low. The question of why the S&P 500's trading volume has been so low is a compound one. First, why has the volume been so low this month? Second, why has it been declining over the past few years? Let me tackle the first part of the question in a single word: July. Since 1950, the average monthly S&P 500 trading volume as a percent of total average annual volume was the highest in December and the lowest in July. Even when looking at the monthly trading volume averages during bull and bear markets, July's contribution was the lowest and December's was the highest. Not surprisingly, the highest three-month stretch occurred from November through January, while the lowest was seen in May through July. So I guess the old saying that in the summer investors focus more on their tans than their portfolios is true. Taking this analysis one step further, one could therefore expect trading volume for the S&P 500 to pick up as the year progresses and peak in December. The second part of the question, why has year-over-year percent changes in average annual volume been declining, is a little trickier to answer. One could blame the fallout of the 57% decline in the S&P 500 during the most recent bear market for the very slow recovery. However, should you believe in reversion to the mean, as well as think that we are in the beginning of a new secular bull market, I would say prepare for a surge in volume. I'm Sam Stovall, and I'll talk with you again next week.